Well, hello traders and investors. I'm LA Little. This is your daily NeoTA wrap, where we take a look at these markets. We're doing it differently. We're doing it from a neoclassical perspective. We're looking at supply and demand on the charts, and we're using that information for timing, for trend, for knowing which way to lean and how long to lean that way. Matter of fact, we use something that options players really like, and that's mean time to failure. And that's these numbers that you see here on the trading cube. Back in December, we were talking about the late April, early May time frame as being that place where we would probably see this market have problems. We're almost there. The mean time to failure on most of these indexes, and definitely many of the sectors, has reached that overbought territory, if you want to use the classical term. In our term, it's mean time to failure. It's cumulative. As that number approaches 70, that's typically the time that you see markets try and turn on that time frame. And that's what we're doing. And then when we're doing it across the board, and again, the mean time to failure, the neoclassical model, it uses time, which is probably the most difficult thing to use in your trading equation. So I do the show 4 times a week, every Monday through Thursday, broadcast at before 10 o'clock Eastern Time. It's archived on YouTube, and it's under the channel LA Little. If you'd like to learn more about the site, about how these things work, you can write me. I personally, anyone that comes on, at least as long as I can, anyone that joins the site or wants to join the site, I will talk to you personally. I will explain what we do and how we do it, and I will walk you through the site and answer your questions. I was on a call today with a new member. We spent maybe, 35, 40 minutes or so. I talked to him about how to do swing points, how to do those calculations, how multiple swing points coagulate at certain price points and what it means, giving him a good feel for how neoclassical works so that he can hit the ground running on the site and make productive use of it while he learns more and more about the model. If you're interested in that, again, just write me, tat@tatoday.com, and I will talk to you about how this works and how you can get involved. As far as what these markets did today, let's look at the numbers. NDX down 0.5%. S&P ends up flat. Now, all these indexes were pushing 1% losses, anywhere from 0.75% to 1% loss intraday. But by the end of the day, what happens? The buyers sneak right back in there and start buying again. So the S&P is almost flat on the day. If you look at the Dow, it was flat on the day. The Nasdaq composite down 0.25%. And the Russell was strong all day long. This one would not give it up, finishes up almost 0.75%. You're not going to get a major drop until all these things line up together. If you go to the other side of the equation, precious metals popping higher. We've been in precious metals now for a good couple of weeks in our portfolio, the TA Today portfolio. While this market is churning, we're slowly increasing the value of that portfolio, and we're doing it through a fairly safe mechanism without a whole lot of exposure, but exposure in places that benefit us. If you look overseas, you had some trouble in Asia. It was flat pretty much in the CACs, down 0.5% in the DAX, and the Swiss market was actually up on the day. If we go to the charts, what we're going to see there is what I was talking about, and that is that this market was trying to drive lower on the day. You can see the tail down here at 2337. Ends up a doji. It closes almost at the high, or actually at the high today, and pushes right back into the range. If you want to do the ranges, I've been showing members this for a while. I've been saying, hey, respect this range. When you get down to the bottom of the range, you want to buy it. And when you get to the top of the range, you want to sell it. That was the sell back there. Here was the buy here today in terms of the range itself. And so far, that looks like a pretty good buy. If you're looking at the index intraday, you could see the market turn intraday, came down there, wallowed around in that area for a while, and then flipped back around. I thought I was going to show you a chart intraday, but I don't have it up right now, so we'll just skip over to the next graph. Let's go to the strongest sector today. And the reason you had to believe that this thing was going to try and turn today is that this Russell just would not trade lower. The intraday got slightly under yesterday. It was 131.61.54. Yesterday it gets the 13.60.54, so it just undercuts it by about $1. Flips back around, has a little bit more volume, so that says, hey, you can come back and do it again. But at the same time, that's not the most important thing going on in this chart. What you have is you have some wide price spread bars there. You have another set over here, and those are the range. Top of the range you want to sell, bottom of the range you want to buy. That's been the mantra. It probably will be a little bit longer. If you're doing a one-sided trade, then of course you're just waiting on the lows and you're trying to buy it. A one-sided trade probably was the right trade initially. Right now it's becoming a little bit more questionable. If you look at it on the weekly time frame, and again we're looking at the Russell here, you've got a well-defined range that has set up now. And so what you're going to be looking for is a break of this range is probably going to lead to a faster move one way or the other. More than likely, you're going to get a break of multiple swing points. If you get up underneath here and stay under it, you will get multiple swing points most likely. And pretty soon you're going to have another swing point high print. It's going to be this one. So again, you're going to have congruent swing point highs up there as well. And so this market is setting up for a faster move either way, most likely when it finally breaks. Looking at the Nasdaq, same sort of picture, right? It's trading in that big range as well. You got a big range here off your big wide price spread, heavy volume bar. And actually, that particular bar is not the heaviest, but if you do the Neoclassical, it says the 6th heaviest bars. That's one of them. And so as it pops down towards the bottom, right, that's the buy. Towards the top is the sell. Same thing across all these screens. Same thing across many sectors and many stocks. If you're trading it that way, you're making money. If you're sitting there, you're doing nothing, you're just churning. If you're putting tight stops in, you're getting chopped. And you're getting beat out of positions, and you're losing money most likely as a result of it. If you move over to the sectors, I haven't looked at these, so we'll flip through them real quick together, see what they look like. Let's start with the Biotech. Biotech trying to trade under these swing point lows, hasn't been able to do it yet. That still looks okay, still testing. The transports. Now the transports yesterday actually did something valuable, and that is they got over the swing point lows high. 164.90, they closed it at 165.08. They couldn't break it back down today, so let me draw this so you can see it. You've got this bar here, right? That's the bar it got over yesterday. Typically, that's a bearish retest regenerate. If you get over it, even if you can't stay over it, it typically says that even if you come back down here somewhere, you're going to try to come back up in there. So most likely, we have seen this trend change on this time frame to something more like sideways instead of down. That means the next trip back down probably will set up some sort of a buy opportunity. If you look at it on a weekly, because you want to look at both, if you look at it on a weekly, you broke a swing point low, you flip back up, you're doing the test on it as well. That retest regen here is 164.91. If it gets over it, that would be further confirmation that most likely we've got a change in the trend. If we look at the SOX, now the SOX finally breaks down. I've been talking about this for a while. Even though it got the hammer reversal, it has changed trend finally, and you see that change here with the arrow saying that no longer is it bullish, which it has been forever, but instead, it's sideways, not bearish. So you got a sideways trend. It was suspect. In other words, it broke under the swing point low with slightly less volume. If you look at the key part here now, it's going to be the retest regen, just like we were just talking about elsewhere. As it comes back in here on this bearish retest, can it regenerate to the downside? My suspicion is that it will, and that's what I'll be looking for as it does its selective bounce. If we look over at the others, basic materials, still just churning. If we look at energy, I've talked about before, probably is going to try and head higher. Did a video on that. If you haven't caught the video, you might want to just pop over here hit the videos section and see what that looks like. Financials, another key area. This one is going to be key come Thursday when you start seeing the earnings come out on them. If you break these swing point lows, and there's a bunch of them nested down here, if you start breaking these guys, right, you're going to end up with multiple swing point breaks, multiple time frames, and that will lead to a faster move to the downside. XLI still holding in the range. XLK, this one's been trying to break. Notice what it did today. So it comes into this swing point low, comes into this swing point low, and what does it do? And there's another one actually right in that same area. What does it do? Test them, flips around, holds trend, hasn't given it up yet, but again, volume comes in. That says that more than likely you're going to try to get back down there again. What is it doing? It's holding the range, right? At the beginning of those ranges, you know, when they hold, what you want to do is try to buy the bottoms of them, and that was another buy indication here, just like I've talked elsewhere. If we move over to the XLP, so what I've seen last week, and we'll see if it's true still, yeah it is, the XLP is getting some of that money that's moving out of those other sectors. Same thing probably with the utilities. XLV, flat, nothing happening there. Here's the utilities. Yeah, kind of happening there. Money kind of rotating into the safer things because they don't want to leave. And here's another one. Trying to break down, volume expanding, but you get a hammer reversal. It's going to hold range longer. So what does it look like to me? Well, that reversal today, even though we're not out of the water, is suggesting that this market is going to try and hold at these levels. Let's take a quick look at the gold and silver market since those are starting to move. Volume comes in on gold today, breaks swing point highs, trend change to the top side, and so you can see that trend change here, right, where you're looking at this arrow, a trend change there that you broke over this swing point, you broke over that swing point, and you had volume escalation. That gets you a confirmed breakout to the top side on this time frame. If you move it over, look at it on the weekly, going after this swing point highs high, and that area is right there, about 124.5, and you got another one right up above it. I think that's your target zone to sell. You can see the red zone telling you that on the TA Today charts. We don't just draw those lines randomly. There's an algorithm that looks at anchor bars, weights them based on time, proximity to price, and the anchor bar's value. VIX, the VIX won't come down. Now this is a reflection again of people not wanting to leave the market. If you don't want to leave the market, you either move to safer things like we were talking about with the XLP, XLU, or you reach over and you grab something like volatility. Volatility rises when the market falls, but right now volatility does not want to decline. Why is that? Well, because people keep pushing on that string. They keep buying that volatility as a safety hedge against the shares they don't want to sell, and that keeps driving that price higher. What does it look like to me? Well, looks to me like this market isn't going to roll quite yet. We talked about the late April, early May time frame. True to life, that's the way it's working out. Looks like it's going to hang for a while longer, and you're going to continue to get this chop. That's it for tonight, folks. Have yourself a great one. And again, if you want to talk to me, just shoot me an email. Have a great one. Good night.